The Federal Reserve met today. What does it mean for mortgage rates? The Fed met, and yet again, they did not cut interest rates. However, it was kind of interesting to see it was a 9-2 vote in favor of not cutting. This is the first time in 30 years where two governors voted against the grain in order to cut. So with that, it kind of shows some internal turmoil possibly, and the market is kind of taking note. So there's about a 65% odds, if you look at where traders are trading right now, that they think the Fed will cut at their upcoming meeting in September, and about the same 60% odds that there might be 2 rate cuts before the end of the year. There's 3 meetings left, so many traders are favoring that there might be 2 out of the 3 next meetings cutting rates by about 0.25% each. Now, the Federal Reserve interest rates are not mortgage rates. Those are 2 totally different things. However, this is kind of a unique time where both of those are looking at the same thing, which is inflation. The Fed will not cut until they see inflation under control. They're saying they're very data dependent. They want to get inflation down to 2%. Right now it's at 2.7. It's kind of been stubbornly hanging out in the mid-2s for the last year or so. Now, looking forward, if the Federal Reserve does end up cutting once or twice before the end of the year, it doesn't automatically mean that mortgage rates will get better. However, in the current times, I think it will certainly help. There's a couple reasons. One is just the emotional factor. It's a good sign that they believe inflation is under control, because mortgage rates are also looking for those signs. Very good chance that mortgage rates will drop. And the big reason to that is almost every time when the Fed cuts, it's to help the economy. They know they need some easing up. People are pretty tight, and I think we all can tell people's debts are at record highs, and the Fed cutting rates gives them some relief. So when those things happen, traders like stocks and bonds type investors, they will pour into bonds because they want a safer investment, because they know if the Fed's cutting, the economy is in a little dire situation. Every time bonds are strong, it helps lower mortgage rates. So that's the connection there. I do think we will see that mortgage rates get some relief should the Fed cut, and it sounds like there's about a 2/3 odds that they will.